Alright, it is 9:48 a.m. and I had a bit of a weird experience, something I haven't done in a very long time. I've been looking at Rivian and I was interested in something where I can buy and hold on for a while, like a swing trade. Mainly because of the fact that it's had this downtrend for a while. It kind of broke past it and now it's selling off, and I want to see where it can just sell off, find a bottom somewhere. Maybe it might even downtrend so much if it wants to, it can get near the trend line or at the trend line, but ideally not back under the trend line, and then at that point it can be something where I can go long and ideally profit from if it works out. And I saw this downtrend and everything, and I decided to take a trade right here because it looks like a morning panic bounce play, not necessarily maybe the best idea, especially because I didn't even go over my weekly recap video, so maybe I'm just not in the right mindset. But I had this thing where I did buy 50 shares at 944, and this was at 8 yeah, 830, 1838. So it was right here when I entered, and my risk level was the day low breaking. And when it did look like it was going to break the day low the next minute at 9:45, I tried to get out, but I wasn't clicked in the trade thing. So what happened was is that I pressed my cut losses quickly, shortcut or hotkey, whatever you call it, and it didn't go through because it wasn't, I guess I wasn't clicked in the trade window. So I clicked in it and I pressed it twice. So what happened was is that I got out of those 50 shares at 9:45, and that was at 1822 right here. And then because I pressed it twice, I actually sold 50 more shares. So I ended up shorting Rivian, which, yeah, it would have been super profitable, but I just wasn't in the mindset to short it. I just wanted to cut the long position I had. And once I saw that I was short, I decided to just hold on to the position a little bit, but then just get out very quickly the moment it looked like it was trying to turn around because it wasn't necessarily something I was interested in. Hindsight 2020, I would have had a trend line right here, and then it would play off of these candles and I would still be holding on to the position, although maybe I would have sold a portion because it did break below the lower trend line, which is super bearish. It continues to sell off, so it actually would have been pretty profitable, that idea right there. And yeah, that's kind of interesting. I did cover at 818 and that was at 946, so right here at 818 is when I covered. Yeah, that's kind of weird. I lost $7 on the first trade, and then I made back $2 on the second short position. And ideally, I guess I'd be more profitable if I used the trend line properly. And that's something I need to, start doing more to start off the year because it seems like something that can really help me be super profitable trading. Not even this one, just like in general. I'm gonna probably rewatch the weekly recap right now, and I don't see anything too interesting with the listed stocks besides Rivian and the OTCs. I don't see anything really nice with that either. I'll make an update later. I'm still interested in buying Rivian for a swing trade, but not right now. Alright, it is 10:16 p.m. and I'm here to call it off. Overall, I'm going to be down on the day $8 and I believe 57 cents. That was 3 trades with Rivian, and I added a new thing right here, and this essentially is going over whether or not the risk level I had was broken in the first 10 minutes, in the first hour, and did it ever break by the time it was midday. I think that will help me because one of the things I've been struggling with is being in setups that maybe are uptrending and then I sell when the uptrending trend line breaks, but then I don't hold for maybe a higher low or something like that. And then it ends up being much higher and I miss out. And I think this can just show me that a lot of the setups I tend to trade work out more often than not. And that can help me be super profitable. One thing to note, I did trade more shares than what I should have with listed stocks. I have a $10 risk level. So on these two trades, I should have had just 25 shares, and that would have been appropriate, and I would have lost less as well. Kind of unhappy that with this Rivian trade that I wasn't necessarily trying to jump in because I wasn't, in the mindset of short sell a setup. It did work out super nicely, and I'm not going to give myself, a whole smackdown, but I did knock off some points because I'm in the setup because the day low broke, which is a short selling setup. I just wasn't really trying to jump into that. And it stuck with this trend line for a very long time until the 1760s level. And you can see this might have been like a little short squeeze, cover wick perhaps. And yeah, it just would have been like something where it would have actually been really profitable from. But at least I was, in theory, in the position to do something like that, just to show that a cover once the trend line broke would have been actual really nice profit there. So that's pretty cool. And I'm not going to do that to short setups because I know from my previous trading accidentally doing this several times, Schwab will like just close your account because they just find that really bad for somebody with a cash account to somehow end up shorting a stock, especially if it's not even readily available to short. And let me just see if this is something that is shortable. Actually, no, I think it won't tell me anymore because the market is not open right now, but I think RIVN is a readily shortable stock. Anyway, that's the situation with that. And then I did have one more trade with RIVN, and that was morning panic bounce play setup. But now trading it off of this range right here. I did try to go long at 1757, so that was roughly around right here in this little range. And I did get out when it broke the day low at 957, which would have been roughly around here, and that was the third trade. I think the lesson is really, because it seems to be the case with listed stocks. Normally, when I would go for a morning panic bounce play, I'm gonna be interested in going long after it breaks the downtrending trend line. So you can see the first trade I had right here, it broke the downtrending trend line, and then I got in, and then I got out when it, went under the day low, and then I tried it again here once it broke past this one again, and I've seen this happen a few times now. It breaks the downtrending trend line, it uptrends a little bit, and then it sells off, finds a bottom somewhere, and then that one usually offers a better bounce. So you can see this one not as nice, but a better bounce than what it did here. And then once it broke past this trend line right here, it sold off even more, and then it found a bottom somewhere, no longer where the trend line was again after breaking past it, and then downtrending some. So I think I'm gonna just be more patient and allow a setup that is downtrending to break a trend line and offer some kind of a baby bounce or crappy bounce, and then to be interested in buying once it has another dip. And ideally, it doesn't just, like break the trend line right here and just shoot up, just straight up after the line. I haven't been seeing stuff like that working out lately with listed stocks and OTC. So that's the situation with that. A bunch of good lessons, and there was opportunity to be super profitable. Ideally, I can capitalize on that. And yeah, that's it for this first day of the year. A lot of good lessons to go over.